also becoming more founder friendly. They're realizing they have to develop relationships to win deals. You can't just pick up entrepreneurs by knowing a whole lot more. Walk in with your Patagonia puffy vest and your, $300 dress shirt and French cuffs and talk down to the founder of a manufacturing business and hope to win his company over. You've got to be in the trenches. You've got to develop operational expertise. You've got to be willing to be in there, kind of in the front lines of existential risk of running that business with the founder.
I don't know if you had a chance to look at the YouTube channel or my conversation with Pat Linden. Yeah, so
I did.
This is what I've been doing. I finished law school. I wanted to help the law community, especially. I saw a lot of my friends struggling to get clients because you go to law school, you learn legal. I mean, I think that not just like law school, like every type of school, right? You learn everything, but you don't learn how to start a business, how to get clients, how to do like marketing. And I had the prior, that knowledge because I had businesses in Brazil prior to going to law school. So I started helping some friends out, and referrals are coming in, and then now we've been established and we have over 20 brands all over Latin America. So it's been very fun. But I wanted to get better insights into legal industry, finance especially, because I feel like a lot has changed since AI, especially, right? Yeah. Like everybody's talking about AI. So in order for me to do that, I didn't find a better way than, like talking to people, having this type of communication, this conversation. But I also thought it was going to be very selfish to me to just keep all this to myself. So I'm sharing with the community, and I'm going to create a white paper after a finished interview with everybody. Nice. I have more than 50 people so far, and I'm going to keep doing that because it's been so nice. So that's if you don't mind, I'll share this on my YouTube link.
Please.
Yeah, I'm happy to collaborate as well. But so tell me a little bit about your company, what you guys been doing. I saw that you do business consulting, negotiation, and all that. How did it all start, and how's it going?
Yeah, so it's fun to talk about. So the primary company is called Candor Advisors, and that, without glossing it up too much, it's like so many other boutique investment banks. But one of the unique things about Candor Advisors, whether we're doing consulting on how to get a founder up to a value at which they would be willing to sell or might have better control over the terms of their deal or their legacy, or we're running a broad process and we're taking a company to market and evaluating 19 different indications of interest and trying to pick the right buyer and go through diligence. In either of those capabilities, we only work with selling founders. We don't do any buy-side work. We do not help the predators. We stand on the wall with the founder to make sure that they optimize their outcome, whatever that looks like. And unlike some of our kind of sister investment banks, I would tell you that, a seller finance deal or a seller becoming a limited partner in their own business and developing a successor is the better transaction. We'll help with that and just work as consultants. And most of our friends in investment banking only truly want to work on the deal if it's going to be an external sale and there's a success fee involved. And we're not preaching it all. We just think that not all businesses are going to be above 2 million of EBITDA with recurring revenue and broadly attractive to both financial and strategic buyers such that you can run a competitive process and get them a big number. And we focus in on where our bias towards only working with selling founders serves us best. And frankly, that has then led, Jessica, to a separate business that we opened to educate founders, because what we found was, so we got really, really successful with digital marketing quickly. Mm-hmm. When I launched the business 5 years ago, we didn't have, any clients. We had a few people we could talk to who thought they might want to sell someday, and we were going to help them try and build their deal team. We had no aspiration to be an investment bank. I was licensed to do all that stuff. But my thought was that I was going to refer business to investment banks and get the right M&A counsel involved. And if like a sell-side QV was necessary, I'd pull in from my CPA network and, I would advise in the background. what ended up happening, just to stay relevant, I would post a weekly video about something in the M&A world, like demystifying a term or talking about, something a founder would want to know if they went to market, realizing that my target audience was not Ken Moelis or Frank Quattrone or some, legendary investment banker. My target audience was a manufacturing guy who's, doing 20 million of revenue, employing, 75 people somewhere in the middle of the US, running a nice lifestyle business and spending the weekends on his ski boat or whatever else, and gets towards the end of a life and sort of says, oh no, my general manager can't afford to buy me out, and I'm not sure how you sell a business. That was my guy. That was my target. I mean, we've now been involved in almost $1 billion worth of transactions in the last 3.5 years. We've been involved in selling a life science company for $300 million to a public company. We got involved in selling a cannabis services business to a public company for $215 million. We just finished a $30 million sale of a fintech software company to a really terrific private equity firm. Along the way, what happened is all those people that reached out from the stuff that we started sending out were either too early or too small or not quite ideal to sell. So we formed another company called EBITDA University that teaches founders what they need to know if they want to try and DIY it, or if they're going to build a team, or if they're going to try and build to a number, which things the buyers will pay up for, which things they'll get penalized for, how to make sure that they're ready when the time is right. So it's not exit planning, it's not succession planning, it's not, trying to it's just there are a few people that are educating search funds and independent sponsors about how to buy businesses. And they hold these conferences, and there's one I'm aware of in the Midwest that gets more than 1,000 people to attend, to pay money to attend a conference to learn how to buy a business. And frankly, what's not happening is anybody doing that to equip sellers to make sure that they're not going to get ripped off or fleeced or structured into a bad deal because they're too busy running a business. They're not going to go to a conference to learn how to sell a business, right? So we got to go to where they are. Anyway, that's a bit of a long-winded way of explaining the two different businesses we have, but that's what I do.
This is awesome. And then we're talking about like targeting, avatar. How do you get your clients? Is it mostly word of mouth? I do see that you're pretty active on social media too. Like tell me like how successful have you been with the marketing?
Yeah. So more so than we'll only work on 1 or 2 deals at a time on the M&A side. And we can only work with 3 or 4 consulting clients at a time, because what I found really early on, my network, as soon as I said, this is what I do, my network went, yes, that is what you do. And they started referring stuff. So we went from, at 2 months in business, we went from having 1 consulting client to having 8 consulting clients after 6 months. We were making 4 or 5 times as much money than we expected to make. 7th or 8th client then asked us to be their investment bank when they got an unsolicited offer from a public company. So our baptismal was me getting on a Zoom call, having only 30 minutes beforehand reviewed the company's unaudited financials, to argue with a billionaire CEO of a public company about the valuation of my client's business. This guy dropped more F-bombs in a 45-minute call than I've heard in 10 years worth of business meetings in my life. And basically, his counter argument to everything I said was, I'm a billionaire, you're an idiot, right? And I just hung in there. And my client saw me stand on that wall, and they then started referring everybody else. And beyond that, people would view the videos that I was posting on LinkedIn, and they would forward them. It was mostly other advisors that were seeing them, but they would forward them to business owner clients and say, you ought to check out this guy's stuff, right? Now we've got, I think at last count, around 170 videos in the insights section of our website. And, I'll be out like at lunch or playing golf with another investment banker, and he tells me that he and his partners refer people to my website, not to come hire me, but rather than create that content on their own, they'll be in a conversation with a potential client about whether they should favor a stock deal or an asset deal. Be like, go to this candor-advisors.com and look it up. He's got like a searchable content library. Just look it up. He's got a couple of videos in there. So, we've just been kind of inundated with lots and lots of people who are interested in what we do. And they're not all great fits. Some really, really successful, profitable gun store in Oklahoma reached out to us and wanted us to help them. Not really my vibe. On the other hand, we got lots and lots of people in cannabis and cannabis services that, because we'd done a couple of transactions, we were starting to get a lot of inbound traffic there. A lot of the plant touching side of that business is going to struggle for a while, and we didn't really want to, kind of narrowly define ourselves by being the experts in that area. We like to kind of keep it interesting. We like to work where we feel like we can get the founder to the right outcome so that the alignment is really, really strong.
Yeah, I think that this is very, very smart way to do business. Absolutely. So fun. What about trends? What trends are you aware of? Because I know everybody's talking about AI. I don't know if there's anything different that you have seen.
Yeah. Well, so I'll give you this quick snippet on AI. We created Candor GPT. What our web development guy figured out was that I have published so much content that if you feed 170 some videos and take the transcript of those and you feed them into one of the AI engines, you can come up with Candor GPT. So we have something that answers questions like me. It's pretty amazing.
I gotta test that out.
And
That's
a little weird. We're not quite ready to publish it yet, but we use it internally. It's amazing how it works. So we'll probably go ahead and put it on the site at some point. We may even write a book using Candor GPT, because the most commonly asked questions I get or something like that. But definitely AI, especially as kind of a thought partner or a productivity enhancement tool. Like, for instance, I'll narrate what's going to go along with my weekly video on LinkedIn. I'll then feed it into ChatGPT and say, make this more concise and ready for a social media post. And then, to make sure that our stuff is always understandable, Jessica, we then put it into another tool called the Gunning Fog Index, which tells you what level of education your reader needs to be at to understand your content. And we're targeting 8th grade and below, because we meet lots of really, really successful business people who do not have advanced degrees and won't read something if it's not put in really simple terms. And so we try and avoid jargon where possible. We try and avoid 3-syllable words because we find that people just navigate away from stuff. So we use all those tools to make our stuff more accessible. So those are definitely some of the trends in terms of, kind of how we're using technology to improve. Look, deal volume is way, way up. And I'm not just talking about add-on transactions. I'm talking about platform transactions. All of us know that there's $1 trillion+ of dry powder out there looking for deals in venture and private equity. But I'll also tell you that the numbers, the explosion of search funds and additional independent sponsors and family offices who want to invest, more directly. There's so many new buyers out there. That's good and bad, but as a trend, what it's doing is that multiples are probably up at least a half turn and maybe 1 to 1.5 turns over last year, especially for A-tier companies. And the numbers of transactions is starting to move back towards 2021 levels. So what we're seeing, there's a whole lot of pent-up buying demand, and where we think it largely comes from is what I would call kind of a Goldilocks environment for the last 18 months. Private equity firms, knowing they needed to put capital to work, or they were going to have to give it back to their limited partners, but not willing to take the risk that if something happened with the economy, they'd be ringing the bell on valuation right before things turned down the other way. So they were, and private equity firms, especially big private equity firms, really drive the market, because strategics, may be growing their business inorganically while they're growing it organically, but they don't drive the market. Private equity firms tend to get strategics to pay up. Investment bankers tend to, pit the two against each other, create competitive tension to get the deal done. And everybody would rather sell to a strategic than a private equity firm, at least conceptually. Sometimes we educate them about the fact that actually, there are some great private equity firms out there that aren't going to, screw them out of a deal, and are actually going to be a fantastic financial partner and help them grow to another number. Right. So what we're seeing is private equity firms are having to get more differentiated and more specific. We're seeing that the fact that a private equity firm that has a fund can compete effectively against an independent or a search fund by saying there's no closing risk with us, we have the money. And they're also becoming more founder friendly. They're realizing that they have to develop relationships to win deals. You can't just pick off entrepreneurs by knowing a whole lot more. Walk in with your Patagonia puffy vest and your, $300 dress shirt and French cuffs, and talk down to the founder of a manufacturing business and hope to win his company over. You've got to be in the trenches. You've got to develop operational expertise. You've got to be willing to be in there, kind of in the front lines of existential risk of running that business with the founder to win that deal, right?
Yeah, absolutely. I love that. This is all, my business is about too. Like we really like the foundation of building relationship and networking. I think this is the relationship that lasts for sure.
Yeah.
What about competition? Like how does your competitive landscape look like right now?
Yeah, so competitively, I mean, look, we're rarely aware that we're competing with anybody. We know that I think we compete with a concept. So my approach, which like was not developed by, I have a couple of people on the advisory board of Candor Advisors, and they're kind of my advisory board in life and in business. And one of them, a good friend of mine, Kevin Hoffberg, came up with a term probably 25, 30 years ago, never sought to protect the intellectual property. But he essentially says, look, great advisors are a combination of guru, guide, and gladiator. Guru, that's why you think you're hiring me. I know stuff you don't know. Guide, hey, look, at each one of these inflection points, I'm going to give you the benefit of my useful scar tissue to say, here's what I've done in the past when things like this came up, or these are the things to react to, and these are the things to ignore, and here's what I've seen other people do well. And then gladiator, so you have told me that there's some outcome you want to get to. That's future you. Current you is going to get in the way of that, because your fear, your anger, your reactionary stuff. When the private equity firm looks like they're going to retrade your deal because they found something in due diligence, I got to be a gladiator to fight with current you on behalf of future you to make sure that you don't screw up the deal and that we get things to the right place. What we find is that gladiator piece is something we're willing to do. We're willing to be an advisor, not just a transaction expert, but an advisor. And so within our business, we look for opportunities to collaborate with founders. We look for connection. We look for chemistry with founders, because we know that whether it's going to be a quick deal, and we're responding to an unsolicited offer, we think we can get the LOI to a place where we like it and get the team in place and get through diligence in 90 to 120 days, or we're going to be embedded for a year through a full process and developing, a teaser and an NDA and a SIM and bid process letter and narrowing things down and then going through all the rest of that stuff. We want to like the founders. We want to align with the founders. We want to be on their side. And so that's what we're looking for. So, what I would say is that competitively speaking, if there are other investment banks that focus on that same stuff, then I guess we're competing with them. But we don't, we're just not aware that we're competing with anybody else. And some of that is that, you look, maybe I'm just a typical native Californian and I'm willing to be a little crunchier than the other guys. I don't know New York investment bankers that talk about heart and gut stuff like I do, you know?
So true. And you're talking about like the culture and some people that help you out. Like how big is your team right now? I saw that you create a lot of content. Do you do all that yourself? Do you have like like people helping you with marketing and sales and customer relationship? Do you have that all narrowed down, or it's pretty much
Yeah.
you?
Yeah. So when I started it, I used the royal we a lot, but it was just me. And so I have a couple of full-time employees because when you do large deals, you can't run a data room and be kind of the primary point of client contact and buyer contact. So I have fantastic person, Allie, who runs the data room and handles. She also manages our buyer universe and investor universe, and kind of manages financial sponsor relationships because we got to stay kind of connected to them. Allie and I co-create with my digital marketing guy, both of all the stuff that goes onto the websites, all of our digital outreach, and kind of thinks through the technology side of our business because we're not that interested in scaling the business. We are very interested in getting as much leverage as we possibly can. And then we outsource things on a pretty, you could call it a distributed workforce because we work with the same people over and over again. But some of the building of the buyer universes, we do that with an outsourced research firm. A lot of the valuation work, we have a couple of different pieces of software and we know how to do discounted cash flow. But I would tell you that it's more useful to have access to PitchBook and GF data and Crunchbase and things like that. And so we work with other firms to get that. Because I'm licensed a number of different ways, 7, 63, 24, 79, all the different FINRA securities licenses. Finalis, my broker dealer, has a lot of terrific, kind of data and collaboration. And so, we work in there. And then we have the Candor Advisors National Network. So we have 20, 25 different law firms, a dozen or so accounting firms, 50 other investment banks that we on a regular basis like reach out to, kind of talk to about deal flow. And so we kind of pull from our network, we refer into our network because we don't want to we want to be a great resource to the founders that reach out to us, even if they're not the right people for us. Like that gun store owner in Oklahoma, we got them to another investment bank. We didn't just say, hey, we're not your people. Look, every founder who takes the risk of, gutting it out through the early stages of building a business and generate something that's got transferable economics that needs to be sold for them to have an outcome. Like, we just want to make sure that we're responsible, that we get them to outcomes, whether it's us or somebody else. So, in terms of employees, not that many, but a lot more than we started with. And then in terms of, kind of outsource stuff, we have a, pretty neat distributed workforce that we regularly work with.
I like that. I like that. This is very nice too. What about goals? Because I know that the company is just growing so much in such a short period of time. Do you have big goals for the year ahead?
Yeah, so we'd like to stay busy for the next, decade or so, working with a few founders a year to get to a fantastic outcome. And they don't have to be like, I don't have a goal in terms of, getting to 5 billion of deal volume, or like, it's not like that, because some of the most satisfying deals we've done have been smaller. And some of the most challenging deals we've done from the standpoint of the interaction with either buyers or our clients have been larger. And so we don't have a bias towards trying to hit a certain number. And, with our model, we charge lower than industry standard success fees, but higher than industry norms on retainers or consulting fees. Because we want to make sure, we want to stay aware of our own human behavior to say, like, we don't want to be so over-indexed to getting to a success fee that we ever have an incentive to have our client accept lousy deal terms just to be able to get to a closing. Because, we want to continue to run our business in a really, really clean way in that sense. And I'm sure most, if not all, other investment banks would say the same thing. We've built guardrails in the firm. The other thing that I would love to do is to see, EBITDA University grow to something that's really, really big. That every time I do a free Zoom call to tell them about, kind of the courses that we do get paid for, that we have more and more people. We get half dozen to a dozen people that'll sign up monthly to be on those calls, and we tell them the 6 secrets to selling their business. We talk to them about the idea that the buyer of their business is a full-time predator, they're part-time prey, and they need to armor up, prepare themselves. We teach them how to do that, right? I'd like to have more and more and more of those people, so that whether they choose a business broker, investment banker, or just a strong M&A lawyer to represent them, that they don't go into those conversations unprepared, because the buyer has all the advantage. They've got the capital, they've got more savvy. The business owner, no matter how sophisticated they are, even if they've been through 1 or 2 sales in their career, that's 1 or 2. The junior associates at the private equity firm have been through that many this week, right? So the sellers of these great entrepreneurial businesses, whether it be, the boomers that still haven't exited, or the early and mid Gen Xers that are moving towards outcomes, they deserve better resources. And so would love to have those. I'd love to have to go up to whatever the highest level of Zoom capability is to be able to accommodate all of those people, even in the free courses, because it seems like we'll get enough business. We don't have to worry about, kind of coming up with a better mousetrap on that front. So yeah, that'd be cool.
What initiatives are you taking to get a lot of people, like get these people into your monthly call? Is it all organically, or are you doing ads and like telling them about it?
Yeah, so we haven't had, we've tinkered with, kind of paid ads, Facebook, Google, that kind of stuff, digital marketing campaign. And the stuff that we send out for EBITDA University that has both videos, links, embedded information, we're getting 80+% opens. We're getting as high as 35 to 50% clicks. We're getting lots and lots of signups. We have more and more people attending. And, in some sense, the more education we can do, the more prospects we're going to have. I mean, if you learn from me what you need to do to sell your business, I'm not going to be the only person that you reach out to when you're ready to sell. Fully, endorse the idea that people ought to talk to multiple investment banks and maybe even multiple M&A lawyers, probably not multiple CPA firms, but, like to figure out which one they have the best chemistry with, because they're going to spend a lot of time with them. They're going to go through hard conversations with them. But we think that, let's call EBITDA University our farm system. Candor Advisors will continue to get plenty of advisory business. We get a lot of inbound referrals from our network, and we get a lot of, kind of interested folks. A lot of people that click the green "Talk to Kirk" button on the website. We get some fantastic questions. And usually if I get a question that I think is broadly applicable, not only will I give specific response to that person appropriately, because I'm regulated in that sense, but I'll also then make that a new video.
Great content.
Somebody asked me about, like, should EBITDA be adjusted for stock-based compensation? Well, there aren't that many people that are going to find that specifically interesting. For those that do, however, I go to my digital team and I say, is this a frequently searched term? And they're like, actually, yes. And there aren't a lot of great answers out there. Okay, guess we got to publish.
Yeah,
right?
absolutely. That's so cool. I love that. Okay, I think my last question would be, if you had a magic wand that you could wave and solve one thing right now, what would that one thing be?
I would level the playing field. There's an information advantage that buyers have that sellers don't. I would level the playing field so that, whether those sellers are learning about it from Vistage or YPO, from us, from whatever, that no seller walks into a transaction without the right advisors, or at least on a DIY basis without the right tools to make sure that they don't take what they've spent, decades, maybe a lifetime, maybe even generations building, and give up half of the proceeds to an earnout that they were never going to get to, or roll equity with an inexperienced buyer who's got no track record for building any ROI. This is the sorts of things that you hear about, that they're not fraud. It's not bad people. They're not like, if we could wave a wand and say that doesn't happen anymore, that there's like a more heads up kind of transaction process, that would be wonderful.
Okay, that's awesome. Yeah, like that. Well, thank you so much, Kirk. I appreciate again
Thank
your
you,
time
Jessica.
talking